demo session. Before moving forward, we'd like to have a poll here. This is mainly for the understanding of kind of audiences we are having today. So I'm just launching this poll, and you need to answer the poll with your experience. If you're a fresher, you need to opt out for the fresher, or if you're experienced, you need to select your experience range. So the poll is live now. You can share your inputs. Okay, I would like to have everybody's input, guys. I've just received 78% of votes till now. Okay, all right. So we have got 81% of votes till now, in which 65% are freshers and the rest are experienced. So it means the majority we are having today is of fresher. Thank you so much for providing your inputs, guys. I'm ending this poll and moving forward. All right. So today's topic is compensation and benefits management. We are going to discuss the compensation and benefits management, in which we'll discuss what is compensation and benefit. You'll understand the difference between compensation and benefits, then how it is designed, and we'll understand the different type of components which are used while the designing of the compensation and benefit structure. Then we will do understanding of the live offer letters, actual offer letters of the candidates which have been offered by us or some of our clients. So we'll have a look on those offer letters and their lectures, and we'll try to understand the salary breakup of those candidates offer letter. Then we'll do a live CPC breakup preparation on Excel, and these 4 things we are going to do in this today's demo section. Let's start with the understanding of compensation and benefit. What is compensation and benefit management? And before moving forward, let's have a poll here. This is mainly for the understanding of today's topic, that is compensation and benefit. The question is, net take-home salary of all employees getting a CTC of 10 lakhs in 10 different companies would be same. Is this statement is true or false? You just need to answer in true or false. I'm just launching this poll, and you can share your input, and we'll move forward to the main content. The poll is live now. The question is, net take-home salary of all employees drawing CTC of 10 lakhs in 10 different companies would be same. If this statement is true or false, you need to answer that. We'll stop the polling at 80%. Since I received the poll up to 80%, I've got 77% of votes till now. Okay, we have reached to 80, in which 96% have answered that the statement is false, and only 3% have answered that the statement is true. So yes, guys, the correct answer of the statement is that the statement is false. The net take home of different employees cannot be same if the CPC is same. Right? So we have a better understanding of this concept in the coming slide. Just ending this poll and moving forward. All right. So now let's understand what is compensation and what are the benefits. Compensation. This is the first thing. Compensation is defined as the total amount of monetary pay provided to an employee. It is the money given for the work. So whatever we are paying the employee in return of their work in form of salary, if that payment is in form of money, that would be called compensation. Anything we are paying in the form of money to our employees in return of their work, that would be referred as the compensation. Compensation usually refers to the money given for the work. And benefits are usually the non-financial form of compensation offered in addition to the cash salary. So whatever compensation, whatever salary you have paid to your employee, benefit would be usually paid over and above that salary, and usually are in the form of non-financial, right? There is a saying that benefits have no direct effect on employees' performance. However, inadequate benefits do contribute to the low satisfaction level. It means that if you are giving so many benefits to your employees and expecting that they are going to improve their performances, this is not going to work, right? But if you cut off any of the existing benefits, or you are not giving any of them, that will surely lead to a lower satisfaction level of your employees. So benefits are equally important as the compensation are. Now let's understand some of the components of the compensation and benefits, which are the frequently used components under the compensation and under the benefits. Now let's first understand the components of the compensation. So these are the components of the compensation. These are basic pay, allowances that can be travel, meal, housing, medical, and there are n number of allowances. Then commissions and incentives, overtime pay, bonuses, profit sharing, and stock options. These kind of components are given under the compensation. Usually they are paid in the form of money. There is no other way that you can pay these component, whether it is a basic salary, allowances, commission and incentive, overtime pay, bonuses, profit sharing, or stock options. These are the components of the compensation and usually paid in the form of money. Then we have benefits. What kind of benefits which are available and are used in the industry? So here are some of the examples of the benefits like holidays, leaves, welfare facilities, cafeterias, infrastructure facilities, rewards and recognitions, insurance, medical, retirement benefits. These are the indirect benefits and usually in the form of non-financial things, right? Like holidays and leave, welfare facilities and the cafeteria. These are the non-financial benefits which are given to the employees over and above their salary. So these are the components of the compensation, and these are the some of the example of the benefits. I will show you some more example of the benefits which are nowadays under the practice in the organizations. These are the examples like health insurance, dental insurance, life insurance, retirement plans, gym fitness, vision care, personal leave, sick leave, child care, paid leave, and there are many more benefits which are being used under the organization. And benefits usually depends on the company's policy. It depends and it differs from companies to company. It depends upon the company's requirement that what kind of benefits they want to offer to their employee, right? So benefit, we are going to stop here only because this depends upon the company that what benefit they want to offer to the organization. But compensation is something that is usually the practice of the offering the compensation is usually same in the all organizations. So benefit, we are going to stop here only, and then we'll move forward with the compensation because compensation is a bigger aspect in the wider area. Now let's understand how the compensation and benefits are decided. How do we decide that how much salary do we have to pay to any employee, right? Let's understand that. Factor deciding wages or salary. What are the factors that affect the salary of an employee and become a decision making factor? What are the factors? So the factors are minimum wages that has been decided by the government. So every state decides their minimum wages for different scheduled employment, whether the employee is unskilled, semi-skilled, highly skilled. These are the scheduled employments, and every state decides a minimum wage for these kind of scheduled employment. So this become a very important factor while deciding the salary of any employee. That is the minimum wage decided by the government. Second is the cost of living and the location where the person is working, the location where he's working. The cost of living of that area also plays a major factor while deciding the salary of an employee. Then the ability of pay, that how much CTC or cost the company have decided to pay for any specific position. The ability to pay refers to the cost decided by the management or the company for any specific position. That also plays a very specific role at the time of deciding the salary or wages of an employee. Then we have supply and demand, that what kind of manpower is required for what kind of work. That also plays an important role. And if the supply, it depends upon the supply and the demand, what kind of manpower is required and what is the availability of that kind of manpower in the job market. That also plays an important role while deciding the salary for any specific position. Then we have labor unions, that also plays an important role. Then industries, as CTC and salary usually differ from the industry to industry. For an example, in ID industry, you'll see usually the CTC is higher than any other industry, right? So these are the factor which plays an important role for deciding the salary of any employee. Now let's understand the minimum wage. As minimum wage is a very important factor whenever you are deciding the salary of an employee, right? So let's understand what is minimum wage. Minimum wage is decided by the state government, right? Like I said, every state specifies and decides the minimum wage for all the scheduled employment. Those scheduled employments can be unskilled, semi-skilled, highly skilled, and they can categorize the employment in other categories also, like clerical, supervisory, or depending upon the education of the employees, like matriculation, graduates, cleric, or these kind of categories usually is decided by the state government. And on the basis of that category only, the states usually decides the minimum wage, right? So minimum wages is decided by the state government. How do the state government decide the minimum wage? The factors deciding minimum wages are cost of living and location of that state. The cost of living of that state, that becomes an important role while deciding the minimum wage also. Labor supply and demand in that specific state, that also plays an important role while deciding the minimum wage of any state. Then the labor unions and industries. Labor unions plays very important role in deciding the minimum wage for the state government, because whenever they decide the minimum wage of that state, they usually refer the same thing with the labor unions as well, right? So these are the factors which plays an important role while deciding the minimum wages for any state. Paying below the minimum wage is illegal. Like I said, at the time of deciding the salary of any employee, minimum wages plays a very important role. Why is that? You cannot pay below the minimum wages to any employee. Paying below minimum wages is illegal, and that will be considered as a non compliant activity. So whenever you are deciding the basic salary of an employee, you need to refer the minimum wage of that state for that specific scheduled employment category, right? And on the basis of that only, you need to specify the basic salary of the employee. That should not be less than the minimum wages decided by the state government. It should be either equals to or more than the minimum wage of that specific state. Then we have here, now referring to this only, we are having a question here that why unskilled labor in Bihar is getting less salary than the unskilled labor working in Delhi. What is the reason that the unskilled labor who is working in Bihar is getting the lower salary than the unskilled labor, the same category of labor working in Delhi? What could be the reason? You can write down your answers in the chat box. I'll be waiting for your responses. What is the reason that the labor who is working in Bihar is getting the lower wages than the labor who is working in Delhi? What could be the reason, guys? You can write down your answers in the chat section. Okay, nobody's answering. Location due to cost, tier of the cities, supply and demand, cost of living. Yes, yes, yes. Very correct, guys. Very correct. Cost of living, geography. Of course, of course. Now, the combination of all this becomes what? Minimum wages, right? What are the factors which decides the minimum wage of the state? Cost of living, location, labor supply and demand, labor union industries. So the combination of all these factors which you have answered in the chat section, we get the minimum wage of the state. The reason is that only that the minimum wage of the state is lesser than the minimum wage of Delhi. That's why the person who is working in the Bihar is getting lower wages than the person who is working in Delhi. If the same person, the person who was working in Bihar, gets transferred to, let's suppose, Karnataka, then in that situation, he'll start getting the wages according to the Karnataka state minimum wage, right? So that is why minimum wages play a very important role while deciding the salary or wages of any employee or the labor. All right, guys. I hope the minimum wages is clear with you guys. Now, let's move forward, and we are having a poll here. Again, this is the kind of survey we are having. So the question is, which is the must-have attribute to make someone the preferred choice during an interview? The options are communication skills, practical skills, and knowledge, degrees, and certification. I'm just launching this poll, and you can provide your inputs. Yeah, the poll is live now, and you can share your inputs. Okay, I'll wait up to 80% of voting, and then we'll stop.
Dheeraj, I guess the poll has not started.
It started, sir. I'm getting the responses.
Okay,
Yeah.
fine, fine.
The question is, which is the must-have attribute to make someone the preferred choice during an interview? Options are communication skills, practical skills and knowledge, degrees and certifications. So we have got 88% of votes till now, in which 19% are saying communication skills, 73% are saying practical skills and knowledge, and only 8% are saying degrees and certification. So here we have got the highest votes for practical skills and knowledge, that is 73%. Thank you so much for the answers, guys. I'm just ending this poll and let's move forward. All right. So there are three terms that you all must have heard, like take home salary, that we also know as net salary, that we also know as in hand salary. Then there is monthly salary, that we also know as the gross salary. And there is CTC, cost to the company. What are these things? How do we calculate all these? We'll understand all these things in the coming slides. Monthly gross salary. What is monthly gross salary? Monthly gross salary is the total monthly earning of an employee. This is the total earning of an employee and total payable salary before any kind of deductions. So gross salary is the total earning of the person, and this is the payable salary before any kind of deductions, right? And second thing we have is the net salary, that we also know as the take home salary or the enhanced salary. What is the net salary? Net salary is the payable salary after deductions. So from this gross salary, from this monthly gross salary, if you deduct all the employee's liability, such as the statutory contributions or any other kind of deductions, whatever amount left is known as the take home salary, which is finally credited to the employee's bank accounts, right? This is called the take home salary. Gross salary is the total monthly earning of the employee, and it is the payable salary before any kind of deduction. Net salary is the total take home, total payable salary after all kind of deductions from the gross salary. And CTC, what is the CTC? This is the total expenditure done on any employee, right? Total amount the company is spending on an employee. What it includes? The total amount company is spending on an employee. It includes the total gross earning of the employee, right? Total gross earning plus the employer's contribution, like the PF, ESI, or any other thing deducted from the employee's salary. Employer also contribute on behalf of that employee. So the combination of the total gross salary of the employee and the employer's contribution or the employer's benefit, we get the CTC, cost to the company. This is the next poll related to the coming slide only. The question is CTC, cost to the company, will be my net take home salary. Is take home salary can be equals to CTC? Is this statement is true or false? You need to answer that. I'm just launching this poll. This is the second last poll we are having. And now you can share your inputs. CTC, cost to the company, will be my net take home salary. Is this statement is true or false? Please provide your inputs, guys. I'll stop the voting at 80%. I've got 63, 65, 68. Okay. All right, we've reached to 80%. So 83% are saying it's false and only 17% are saying it's true. So yes, guys, the correct answer is that the statement is false, right? The net take home salary can never be equals to CTC, because CTC includes the employer's contribution. Like CT is the combination of gross salary plus employer's contribution, while net take home salary we get when we deduct the employee's contribution from the gross salary, right? Now let's move forward. All right, the next thing we are having, that how the compensation and benefits are designed. How do we design the CTC structure, that we also know as the CTC breakup? How do we calculate the CTC? Like somebody has given you an amount like 50K. That 50K is the monthly CTC and you need to do a salary breakup. How do you do that salary breakup? How do you design the CTC breakup? Right, let's understand that. What are the process? What are the steps that we need to follow? So the very first step while deciding or designing a compensation and benefits package is to decide the fixed salary, that we also know as the base pay of an employee. This is the very first step to decide the fixed salary of the employee. That includes basic salary and the dearness allowances, if applicable. Basic salary and dearness allowance. Dearness allowance is something that is widely used in the public sector, not in the private sector. In the private organization, we do not use the dearness allowance frequently. Basic salary, you need to first decide the basic salary of the employee. And what, like I said in the previous slides of the minimum wages, that whenever you are deciding the basic salary for any employee, you need to refer the minimum wage of the state. That basic salary that you are giving to any employee, it should not be less than the minimum wage of the state. It should be always equals to or more than the minimum wage of the state. This is the first criteria. Second criteria is that if the minimum wage criteria is fulfilled, you can go for the second criteria. That is, you can take the basic salary as 40 to 50% of the CTC. Now, why 40 to 50%? That we are going to understand when I'll do the calculation on the Excel. I'll explain you that thing on Excel only. So this is the first step when designing this the CTC breakup. The first step is to decide the fixed salary, the base pay of an employee. Second, once you have decided the basic salary is the major salary, guys, right? This is the main component. This is the fixed main salary of an employee. The allowances may be reduced, increased, or can be removed, but the basic salary is something that cannot be removed or decreased, right? So basic salary is a very important thing, and this is the first step that you need to decide. On the basis of basic salary only, we decide the allowances that needs to be given to the employee, right? What are the allowances? There are n number of allowances which are there that you can pick up for the employees. These are the house rent allowance, conveyance allowance, medical special allowance, entertainment allowance, newspaper allowance, telephone, internet allowance, vehicle maintenance, and the fuel allowance. Depending upon the employee's expenses, you can pick up the specific type of allowances. One very important thing, whenever you are picking allowances for your employee, you need to check the tax applicability on those allowances, because being the employer, our responsibility is to take care of the tax liability as well. We need to usually pick up those allowances which are either completely tax exempted or partially taxable, right? So whenever you are picking up the allowances, you need to check the tax applicability on those allowances. For an example, house rent allowance, right? What is the tax applicability on the house rent allowance, and what is the criteria that we pick up the house rent allowance? We take the house rent allowance as 40% and 50% of basic salary, depending upon the metro or the non-metro cities, right? Why? Because up to 40% of basic salary is tax exempted for the non-metro cities, and up to 50% of the basic salary is tax exempted for the metro cities. Like this only, we need to refer the other allowances as well, and we need to consider their tax applicability, right? So the first step is to decide the fixed salary of the employee, and then we need to decide the allowances for the employee, right? So now the combination of this fixed salary and allowances, we get the gross salary of the employee. This is the total earning capacity of an employee. Basic salary, base pay, and the allowances is the gross salary, total gross earning of an employee. Once you have decided the earning area, the third step is to calculate and decide the statutory contribution and the retirals for the employee. That includes provident fund, if the person is eligible for that, provident fund, employee state insurance, that we also know as ESI, gratuity and the bonus, labor welfare fund, and the professional taxes. This depend upon the applicability. If the LWF or the professional tax is applicable in your state, you need to consider that also. This is the third step, right? You need to calculate the statutory contribution and the retirals for that employee. Then benefits. If your company is providing benefits to your employees, you need to check out that also, and you need to mention those benefit also in their offer letters. Then the last thing is variable pay. If the position is referring to for an example, if the position is for marketing or the sales, which requires some kind of performance bonus also, which these kind of position have some targets also. Now on the basis of that, we also, like companies usually provide them the incentives, and that can be named as performance linked incentive, retention bonus, bonus on the company's performance, long term incentive, etc., right? Now, the combination of all these five steps, we get a complete compensation and benefits package, right? Very first step is to decide the basic salary, base pay of the employee, right? And whenever you are deciding the base pay, you need to refer the minimum wage of the state. It should not be less than that. Second thing is you need to decide the allowances of that employee, and always refer the tax applicability on those allowances. Third is to decide the retirals and the statutory contributions for that employee. Then we need, if the company is offering perks and the benefit, you need to check out that also. And if the position demands incentive or the variable pay, you need to refer that also. Now, the combination of all these five steps, we get the complete compensation and the benefit package for an employee, right? Now let's understand that how the basic salary. Now there are some calculations, like how do we get the gross salary, how do we calculate the net pay, and how do we calculate the CTC? What are the calculation criteria? What are the formula that we need to use at the time of designing the CTC breakup of an employee? So like I said, the combination of basic salary and allowances, we get the gross salary of the employee, base pay and allowances.
Dheeraj,
Yes, sir.
sorry, there is a comment in the
Huh?
comment box. Can you show the previous slide for a second and then you
Yeah,
can
sure.
move
This one or this one?
this one? Yeah,
Okay.
but this one. This one. Yes, now you can proceed.
All right. Shall I move forward?
Some, yes, yes. Acha,
Okay,
previous to
just a
this.
moment. This one, I hope.
Okay, this one.
Okay.
Okay, okay, fine, fine.
Shall we move forward? Any
Then
question?
you will, Vishal, you will get. Okay, we would be sharing all this detail to everyone. Please continue with
Ha,
the
ha.
PPT, Dheeraj. Yeah, you
Sure.
can.
So when we are designing the CTC breakup, like considering all those 5 steps, we need to refer some formulas also, right? If you have to calculate the gross salary of the employee, what is the formula? The combination of basic salary and allowances, we get the gross salary. So basic salary plus allowances, you will get the gross salary for that employee. Then gross salary minus employee deduction, what we will get? The net pay, enhanced salary of the employee. That from the total monthly earning of the employee, when we'll deduct all the employees' deductions, whether it is statutory or any other, we will get the net pay, enhanced salary, take home salary of the employee. Third formula is gross salary plus employer's contributions. We get the cost to the company, right? From the total monthly earning, employees' total monthly earning plus employer's contribution on behalf of that employee in statutory areas or any other benefits, we get the total cost to the company for that employee, right? These are the formulas which we are going to apply at the time of calculation of CTC and Exure as well in the coming slides. Now, there are 3 type of compensation models that we usually refer at the time of designing the compensation structure, compensation and benefit package for an employee. There are 3 type of compensation models. First one is the traditional compensation model. As the name suggests, traditional. So usually in the traditional compensation model, company usually fix all kind of components for the employee. They decide all the components for the employee, whether it is basic salary or the allowances or the benefits. Company usually decides everything for the employee, and there is no choice left for the employee, right? So company has fixed the salary structure with bands based on the employee's grade, and employee has no choice. In traditional compensation model, company decides everything, and employee has no choice to decide on their salary or the package. The next compensation model is the flexible compensation model. This flexible compensation, as the name suggests, the employee has the flexibility to choose the salary component from the basket of components offered by the company. Here, in the flexible component model, the compensation model, usually the company decides the basic salary, base pay of the employee, the fixed part of the employee, and they allow the employee to pick up the allowances. They allow the employee to decide their allowances from the available basket of allowances which the company is offering to that employee. So this kind of option where the employee has some option to pick up their pay or the salary, that kind of compensation model is known as the flexible compensation model. We are going to show all these examples in the coming slides. Then there is a compensation model which is called the combined compensation model. That is the combination of the traditional and the flexible. What is the combined? Like in the combined compensation model, usually 60% or the 70% of their salary is decided by the company, like basic salary or most of the allowances has been decided by the company, and they leave one or two or some of the allowances to be picked up or decided by the employee, right? So the combination is like where the employee have some option, but that option is very limited, right? So these are the 3 compensation models which are nowadays used in companies. Now, this is an example of a traditional compensation model. If you see here, the company have decided his basic salary, HRA, mobile and internet allowance, office wear allowance, and they have specified the amount also for all these allowances. It means that all these components are already decided by the company. And here, the employee has no choice to pick up any allowances according to their expenses, right? According to their expenses or according to their tax applicabilities, they cannot pick up any kind of allowances. While this is the example of a flexible compensation model, where if you notice, the company have decided the basic salary of the employee, that is 25,000 rupees, and they have named the another component as a flexi compensation, and they have specified an amount for this flexi compensation, that is of 35,000 rupees. So it means that this flexi compensation is the amount usually given to the employee that you can pick up allowances according to your convenience from this available basket of the allowances that the company is offering to the employee, right? So employee here is having a choice that they can pick up to 35,000 of allowances from these available options, right? So these kind of compensation models where the employee have the freedom or the option to pick up or to decide their salary, that how do they want to get their payment, on what name, depending upon their tax applicabilities, they can pick up these kind of allowances. So this is known as the flexible compensation model. This is example of flexible compensation model. Now let's take some of the examples, some of the have an understanding of some of the actual offer letters, and we have taken some of the annexures of those offer letters. Let's understand those kind of offer letters and what are the different things in these offer letters. So in this left side of a letter, if you notice, this is example of what? This is the example of the traditional compensation model, because the company have decided all the components: basic, HRA, city compensatory allowance, leave travel allowance, bonus, everything has been decided by the company, right? And there is no choice left to the employee that they can pick up any of the allowance or any of the component according to their choice, right? So this is an example of flexible compensation. This is example of traditional compensation model where the employee has no choice, right? Here the employee has no choice, but this is again a good example of complete compensation and benefit structure. How come? If you notice here that the company is offering these kind of benefits over and above the salary of the employee, like the company is saying that you are eligible for the local travel reimbursement up to this amount, you are eligible for a maximum performance linked quarterly incentive up to this amount. They are giving a one-time relocation reimbursement as well as up to 30,000 rupees, right? So this is a good example of complete compensation and benefit structure. But if you notice this thing in the blue, there is a note. The company is saying that there would be an additional monthly deduction toward the Mediclaim insurance as per the Mediclaim policy offered by the company. So it means the policy the company is giving, Mediclaim policy the company is giving, that is not offered by the company. The premium amount will be deducted from the employee's salary only. So it means this take home salary, this enhanced salary is not the final enhanced salary. There would be a further deduction of this insurance premium from this enhanced salary. So it's always important to check out your annexures very wisely whenever you are checking them out. Then on the right side, if you notice here, what kind of compensation model is this? Again, you will say this is a traditional compensation model because everything has been decided by the company. The company have decided basic pay, LTA, HRA, special allowance, right? But I would say this is a combination of traditional and flexible compensation model. How come? If you notice here in the red box, the company is giving an option to this employee that you can take this LTA, leave travel allowance, at the time of actual expense. Whenever you will travel, you can reimburse this amount, right? This option is there with you. Or the another option is that you can take this amount every month in your salary only. Like you can take this amount as your salary only. So here some choice, some option is given to the employee for their salary. So that's why this is a combination of traditional and the flexible compensation model. Then this annexure, this is a complete perfect example of the flexi compensation model. Here, if you notice, the company have decided basic salary and they have fixed some amount, 5,08,000 rupees for the flexi compensation. And the employee will be given some options to pick up the allowances for this amount. Why this is a good example of complete compensation benefit structure? Like company is giving all the benefits over and above the CTC, right? The Mediclaim or the top up for the Mediclaim, group personal accident insurance, then the group term life insurance. Gratuity is also not the part of CTC. It is been given over and above the CTC. That's why this is a very good example of complete compensation and benefit structure. On the right side also, this is a flexi compensation model. This is a traditional compensation model, but a good example of complete compensation benefits model, because all the benefits that the company is providing to this employee is over and above the total cost which the company is bearing for this employee. Now, this one is an important thing. If you notice here, I would say this is not a good example of a compensation structure, and I would never suggest that you should refer these kind of compensation breakup for your companies. Why so? Because if you notice here, they have, like, this is an example of the combination of flexi and traditional, because they have decided the basic salary, HRA, and they have given a component named as ad hoc allowance, where the employee can pick up allowances up to this amount of 4,80,502 rupees, right? But this is a really bad example of a good of a compensation structure. Why so? Because they have added provident fund and gratuity also under the basic salary only, base salary only, which can never be done. Like, they have named it wrongly. They should have named it as the gross salary, right? Not the base salary. They should have named it as gross salary, because gratuity or ad hoc or the provident fund contribution or employer's provident fund contribution can never be the part of the base salary of an employee, right? So this is a really bad example of a compensation model. Then we are having another compensation. Again, if you see here, they have added gratuity and provident fund in the gross salary of the employee only. Yeah, they are saying basic salary, HRA, special allowance, provident fund, and gratuity, and sum above. They should have named it as gross salary, and provident fund gratuity should have been given in the employer's contribution section and could have made it as CTC. Right? Let's see the corrected version of the same. If you see here, we have corrected it like this. This can be written like this: basic salary, HRA, and ad hoc allowance will give us the gross salary of the employee. And in the retiral section, we can add the provident fund in the gratuity, and annual variable incentive plans, we can get the complete CTC of the employee. This can be written in this way, but in this way, this is completely wrong. So these are the example of the annexures we were having. Now let's move to the Excel sheet, and let's try to create a complete CTC annexure. Let's try to design a CTC annexure, like some amount. If the management or the company gives you an amount, that this is the amount and you need to design a CTC breakup for this amount. Like they say 50,000, you have to design a CTC breakup for 50,000. How do you do that? Let's understand that in the Excel sheet. Right. So I hope my Excel is visible to everyone. Sir, is it visible?
Yes, it is. Yes, it is.
Okay. All right. So guys, here let's try to design the monthly CTC breakup. Like CTC breakup, if somebody gives you an amount that you need to create a CTC breakup of this specific amount, and how do you do that? What are the steps? We'll follow all those steps which we have referred in the presentation, right? For an example, I have taken this amount of 20,500 rupees, right? Initially, we'll take this amount, 20,500 rupees, and we need to design a CTC breakup of this amount. How do we do that? Right? For that purpose, we have taken a basic CTC format in which we have components, we have monthly amount, then we have annual amount, right? What is the very first step of designing a CTC breakup, a compensation structure? To decide the basic salary of the employee, right? If somebody gives you a CTC amount and they ask you to make a CTC breakup, how do you do that? You need to first decide the basic salary of the employee. And how do we pick up the basic salary? What amount we should specify as a basic salary out of this CTC? There are two things we need to refer. The very first important thing is the minimum wage of the state to be considered. Like if the employee is unskilled or semi-skilled or highly skilled or a graduate or a matriculate, right? You need to refer the minimum wage according to his employee category, right? This is the first thing that you need to refer. Once you have complied with the minimum wage criteria, the another thing you can do is 40 to 50% of CTC. Like you can take this basic salary as 40 or 40 to 50% of the CTC amount. Whatever is your CTC amount, you can take it as 40 to 50%. Now, why 40 to 50%? Why not less than 40 or more than 50%? You can do that as well, right? You can do that as well. But usually we do not take higher basic salary because all the statutory contribution are calculated on basic salary only. That's why we avoid taking higher percentages for the calculation of basic salary. 40 to 50% is something which is usually universally accepted, and usually all company refer this. You can go below that also. You can go below 40% of the CTC also, but always remember that it should not be less than the minimum wage of the state, right? That would be non-compliant. Now, let's take that. Let's calculate the first step. That is the calculation of the basic salary. Now, let's take it as 50% of the CTC. I'm taking 50% of basic salary as 50% of CTC as basic salary, and considering that this 10,250 rupees, that is either equals to or more than the minimum wage of the state. It means that we are complying with the minimum wage criteria of the state, right? This is the very first step that you need to do, that you need to calculate the basic salary of the employee. You need to consider the minimum wage and 40 to 50% of the CTC criteria, right? You can go below that also, below 40% also, but it should not be less than the minimum wage of the state. If it is less than the minimum wage of the state, that would be non-compliant. Second thing, I have taken some of the allowances. First step was to decide the basic salary. Then second step was, if there are some allowances, you need to pick up the allowances also for the employee. But like I said, whenever you are picking allowance for the employee, you need to refer the tax applicability for that allowance. For an example, we are having house rent allowance. And what is the tax applicability of house rent allowance? How do we pick up the HRA amount? The criteria is that for non-metro cities, we take 40% of basic salary, and for the metro cities, we take 50% of basic salary. Now, why 40% for metro and why 50% for non-metro? The reason is tax applicability, right? Up to 40% of basic salary is tax exempted in the name of house rent allowance. Up to 50% of basic salary for the metro cities is tax exempted in the name of house rent allowance. Anything which is more than that would be taxable, right? So that's why we usually take the maximum tax exemption amount only. Why? To take the taxable area. So that's why we take 40 to 50%, 40% for the metro city, non-metro cities, and 50% for the metro cities, right? Considering that this employee is living in a metro city, what amount we have to take? We need to take the 50% of basic salary, right? 50% of basic salary we have taken as HRA, because considering that the person is living in a metro city, up to 50% of basic salary is tax exempted in the name of house rent allowance, right? That's how we usually pick up the allowances for the employee. Then we have other allowances named as the telephone allowance. Telephone allowance is exempted up to the actual expenditure. Whatever allowance you have given to the employee, the tax exemption is applicable on the actual expenditure done for this specific allowance, right? Up to that amount, it would be tax exempted. There is no percentage criteria given for this kind of allowance. But how do we pick up these kind of allowance? You need to pick up the realistic amount, like how much amount any employee can spend on the telephone expenses, right? The realistic figures. So considering that he can spend up to 10% of his basic salary on telephone expenses, that comes around 1,000 and 2,500. That is somehow a realistic figure, right? That's how we pick up these kind of allowance. In our actual sessions, we are going to take more allowances. We'll understand all the tax applicabilities for those allowances as well, right? The next we are having is the special allowance. But special allowance, I'm not going to specify any amount for now. I'm just going to keep this allowance blank. Special allowance, I'm going to keep this allowance blank because I want to make this special allowance as my adjusting allowance, right? Because we need to calculate the CTC structure of this 20,500. That amount I want here. If there is any differences in what we are looking for and what we have got, if there is any differences, we will try to adjust that difference in this special allowance. And for that purpose, I'm just keeping this allowance blank here for now. Right. So it means that we have done the first step and the second step. We have decided the basic salary of the employee. We have decided the allowance for the employee, and the combination of basic salary and allowances. What do we get? We get the gross salary of the employee, right? What is the formula? Basic salary plus allowances. We get the gross salary, means sum of all above, we'll get the gross salary. We have calculated the gross salary for the employee. Now, once you have calculated the earning part, right? The first part was basic salary, second part was allowances, third part was retirals, right? Employees benefits and the retirals. Now it's time to calculate the statutory part. So for CTC, what is the formula? Gross salary plus employer's contribution will get the CTC, right? Employer contribute in the statutory area depending upon the applicability of the statutory laws, legal laws in that company. So PF and ESI is something which is universally which is applicable in Pan India. PF and ESI is applicable in Pan India. There are some other labor laws also, like labor welfare fund. Then there is professional tax also, but I'm not taking LWF or PT here because this is the state applicability. These are the state applicabilities, and we'll take those things in our actual sessions. This is demo session. That's why we are going to take PF and ESI only for an understanding, easy understanding. So the combination of gross salary and the employer's contribution, we get the cost to the company, right? So first we need to calculate the PF of the employer. What is the rate of PF of the employer? It is 13% of the PF wages. Now, what is PF wages? PF wage is the amount on which we calculate PF. Earlier, we used to calculate PF on what? Basic salary and the DA. If DA is not there, only on the basic salary we used to calculate PF earlier. But now, after 2019, when Supreme Court has given their judgment on the PF wages, they have specified on which amounts we need to calculate the PF. Companies started calculating PF on either gross minus HRA or the gross salary of the employee, right? This thing, for the understanding of that, why do we calculate on gross minus HRA or complete gross salary? We have a dedicated session that is of the Employees Provident Fund Act. We'll discuss that thing in that session. For now, we are going to calculate PF with the rate of 13% of the PF wages, and considering PF wages, the gross salary. Gross salary, we are going to consider the PF wages, and we are going to calculate PF on the gross salary of the employee by capping it to maximum 15,000. Like, even if the gross salary of the employee goes more than 15,000, we'll limit our cost to maximum 15,000, right? How do we do that? So I'm going to use the if function over here. Before that, I'll add round to avoid the decimals, and we are going to use the if function. If function is a logical test. If function is a logical test with two outcomes. First outcome if the logical test is true, second outcome if the logical test is false, right? So what is the logical test we are going to use here? We are going to use the logical test as the capping criteria. Like, if somebody who is gross salary is more than 15,000, I want to limit it to maximum 15,000. Let's use this criteria as the logical test. So if the PF wage, what is the PF wage? We are considering gross salary of the employee as a PF wage. So if the PF wage of the employee is more than 15,000, in that situation, I want to limit my contribution at maximum 15,000. But if it is less than or equals to rupees 15,000, in that situation, I want to calculate on his actual PF wages, bracket close, multiply with the rate of contribution, that is 13%. Since we have added round in the beginning, we need to add the comma 0 also and close the bracket, press enter. We have calculated the PF for employer. Employer's contribution in PF we have calculated. Why 13%? Usually you must be thinking that the employee both contribute 12%. No, the employer actually contributes 13%. 12% plus 1%, extra 1% he contributes for the employee deposit link insurance, and also pay as an PF admin charges, right? 0.5 in EDLI and 0.5 in the PF admin charges. So that is how we usually calculate the PF of the employee. And even if you notice here, the gross salary of the employee is more than 15,000, but our PF cost has been limited to maximum 15,000, right? If you multiply 15,000 by 13%, you will get 1950. So that's how we have limited our cost to maximum 15,000. Now, second thing we have to calculate is the ESI contribution for the employee. For ESI, first thing we check is the eligibility. We need to check whether the employee is eligible for ESI or not. Because in ESI, if the employee is earning more than rupees 21,000, he is not eligible for ESI benefits. And the contribution will also not go for that employee, right? So that's why we first calculate the eligibility criteria. What is the eligibility criteria? Any employee who is drawing gross salary less than or equals to rupees 21,000, they are eligible for ESI. Anyone who is getting more than 21,000 is not eligible for ESI, and we do not need to contribute for that employee as well. What is the rate of contribution for employer? It is 3.25% of the gross salary, right? So let's apply these things and calculate the ESI contribution here. First, add round to avoid the decimals, then add if. Again, we are going to use the if formula. If is a logical test with two outcomes. First, if the logical test is true. Second, if the logical test is false. This time we are going to consider the eligibility criteria as the logical test. So if the gross salary of the employee is more than rupees 21,000. So here the logical test, if the logical test is true, so if the employee is getting more than rupees 21,000 as a gross salary, it means the person is not eligible for ESI, and the outcome would be zero because there is no need to contribute for that employee. But if this logical test is false, the false would be if the means the gross salary of the employee is either equals to or less than rupees 21,000, right? In that situation, we need to contribute for the employee on their gross salary. Bracket close, multiply with the rate of contribution, that is 3.25%. 3.25% of the gross salary. We have added round in the beginning, add comma 0 in the end, bracket close, enter. We have calculated the ESI also for the employer side. Right, now we have calculated the employer's contribution for this employee. Now we can calculate the CTC. What is the formula for the CTC? Formula is gross salary plus employer's contribution. We get CTC, right? Let's apply that. Gross salary plus CTC. It means sum of above three. Gross salary plus plus employer's contribution. We get CTC, right? We have calculated CTC also for this employee. But now if you notice, the CTC we are looking for is 20,500 rupees, but the amount we have got is 18,883. There is a huge difference, right? So that's why we have kept this special allowance cell blank. We are going to adjust these figure differences over here. Before going to this cell, let's try to calculate these also and apply the formula till net pay also. Let's calculate the net pay as well and then move to the special allowance to equal these amounts, 20,500 and the CTC amount. Now we have to calculate the employee's contribution in the same areas, PF and ESI both. For employee, rate of contribution in PF is 12%. So again, we need to type in the formula. No, just go to the employer cell, copy the formula, come back to the employee cell, paste the formula, change the rate. What is the rate of contribution of employee? It's 12%. Same for the ESI, go to the employer cell, copy the ESI formula, come back to the employee cell, paste the ESI formula, change the rate. What is the rate of employee contribution in ESI? It's 0.75%. Enter, and you have calculated the ESI and PF both for the employee as well. Right, now what if we have to calculate the net pay of the employee? How do we calculate that? The formula is gross salary minus employees deductions part, employees contribution or deduction, anything you can say. Employees contribution, if we deduct employees contribution from the gross salary, we'll get the net pay, right? We have applied that formula also. It means that we have framed a structure. We have framed a structure for this compensation, and now we can calculate any amount which we want through this structure. Let's first try to reach to this figure that we were looking for. We were looking for a CTC of 20,500, but the amount we have got is not 20,500. So for that, we need to first check out the difference. What is the difference between these amounts? The amount we were looking for is 20,500 minus the outcome, that is 18,883. Enter, we'll get the difference, that is 1,617 rupees. Like I said, special allowance I'm keeping as adjusting cell. And let's try to adjust this amount. If I add this difference amount in the special allowance, are we going to reach to this 20,500 CTC? Let's try that. 1617, enter. No, still not. Again, there is a difference of minus 53. Let's try to adjust that difference over here. Minus 53, enter. Still not. There is a difference of 2. So it means this time we need to add 2 over here. Plus 2, enter. Finally, the difference is 0 and the CTC is equals to what we were looking for. The CTC is 20,500 that we were looking for. So usually the companies calculate the CTC structure this way. That is how you can calculate any amount you want. Let's add the annual calculation also. For annual amount, you just need to multiply each components by 12 and you will get the annual amount for those components, right? So now this is the complete structure that we have created. Now let's suppose if we have to calculate the CTC structure of 18,000 rupees, right? 18,000 we have to calculate. So again, there is a difference of 1260. We'll type this 1260, enter. There is a difference of 119. Again, we need to add this 119, 119, enter, minus 242, minus 242, enter. 8, you need to 8, add 8, plus 8. Finally, we reach to 18,000. So this is one way of calculating the CTC structure, right? Usually we do not suggest calculation of the CTC structure this way. That can be done, but this is something which is going to consume a lot of time because you need to manually adjust the figures in this cell many times. If you have to calculate the CT structure for multiple employees, let's suppose for 100 employees or for 50 employees, if you are going to use this step, it's going to take the entire day for that purpose. For that purpose, we have calculated an automated CTC structure. We have created this automated CTC structure in which by just following 3 steps, you can calculate any CTC amount that you are looking for, right? If you notice here, we are having formulas in each cell. In every cell, we have added the formula. We have specified formulas depending upon the applicability of that specific component, right? So for creation of this kind of automated CTC calculator, you need to specify formula in each cell and keep only one component blank, right? For the calculation purpose. Now let's understand how do we use this structure for the calculation of CTC and Excel. Now for that purpose, what you have to do, you need to go in data. In data, we have an option of what if analysis. In what if analysis, we have an option of goal seek. Now this is the thing that we are going to use, goal seek, right? Goal seek having 3 things that it asks to set the cell where we want the outcome. So this is the CTC cell, cost to the company, where we want our outcome. To value, what CTC you are looking for. For an example, I'm looking for a CTC structure of 50,000 rupees. So I need to write down 50,000 over here in this to value. Then by changing cell, we need to specify a cell where it will make the calculations, right? So basic salary, like I said, is the major part of the salary, and usually all the components are decided on basic salary. So let's specify basic salary at the cell where it will make it calculations, right? Press OK. Now see the magic. Done. Entire CTC and Excel has been created, calculated for this employee and for 50,000 amount. By using only 3 steps, we have calculated this entire structure. Once you delete this basic salary, everything becomes nil, 0. Now let's take another example. Let's take some bigger figure. Let's assume first you need to set the cell where you want your outcome, right? So this is the CTC cell where I want my outcome. Then specify the amount that you're looking for. Let's suppose I'm looking for a CTC structure of 90,000 monthly CTC. By changing cell, I'm again specifying basic salary. Press OK. Now see, it's done. Just in 3 steps, we have calculated the complete CTC structure of this employee using all the statutory calculations also. If the employees, if you notice here, ESI, employees gross salary is more than rupees 21,000 means the person is not eligible for ESI. Hence, it is automatically 0. Right? So it will calculate all those things depending upon the formula that you are specifying. Now let's take some very odd figure that we usually do not offer, but quite possible that at any stage you need to offer that kind of amount also to someone. So again, specify the cell where you want your outcome. Let's take some odd figure, monthly CTC figure that we want to calculate. Let's suppose 1,89,547 rupees. This is the monthly CTC that we want to offer. By changing cell, let's try if this can calculate this also. By changing cell, basic salary, okay. Now see the magic, done, right? So any figure, any amount for which you are looking at CTC breakup, you can apply this kind of automated CTC calculator and it will do the CTC calculation in just few steps accurately, right? So this is it for today's session. In our actual sessions, we usually teach how to create this kind of automated structure also. Then we discuss about the monthly CTC calculation, monthly salary calculation. We also create help in creating the bulk CTC calculator. If you need to create the CTC in Excel for multiple employees, how do you do that? That also we cover up in our actual sessions. Monthly payroll calculation for the employee, considering all the real life scenarios like reimbursements, overtime, full and final settlements, Considering all those kind of real life scenarios, we teach how to process the monthly payroll. Then we have a dedicated session for the TDS calculation, right? In which we tell the calculation process of the income tax and all the sections which are applicable at the time of calculation of TDS. Then there are two tax slabs that we need to refer in the financial year 2021. How do we pick up which tax slab is beneficial for which employee? That also we tell in the TDS calculation session. Right. Let's move to the PPT again. So till now we have done these things. We have discussed what is compensation benefit, how it is designed. We have gone through some of the actual offer letters and their annexures. Then we have also done the actual annexure preparation in the Excel sheet also. Now this is the last poll we are having over here. Now the combination of all those things which we have understood in today's session. The question is, a compensation structure should address which of the following objectives? The options are compliance with labor laws, less burden to employer in term of cost, less tax applicability, and more enhanced salary for employee. All the above. I'm just launching this poll. This is the last poll, and then we'll move to the question answer sessions. Yeah, the poll is live now, and you can share your inputs for this question. A compensation structure should address which of the following objectives? The options are